let's now analyze another set of earnings, and this time around a strong one actually from Welspun Enterprises. Their order book outlook remains pretty healthy. There's been a healthy execution which has clearly boosted their margins as well. So let's try and understand the quarter gone by and the visibility forward a little bit better. We have with us Sandeep Garg, the MD at Welspun Enterprises, joining in on the show right now. Sandeep, good to have you on the show. Thanks for taking the time out. Let's start off firstly with your order book, which stands at about 10,100 crore rupees as of 31st March. What will be the execution run rate on a quarterly basis for the financial year 24?
Good morning, and thank you for taking me on the show. Yeah, it's been a good quarter, approximately 2,700 crores in revenue at standalone basis and about 750 crores of PBT. So it's been a good year. We have a good, healthy order book. So we expect that with the government push and our strong balance sheet, we should be in a position to book orders. We have targeted approximately 65,000 crores worth of orders right now, which we believe we should be able to target our returns. I would expect about 10 to 13% of win rate. So this is what my order book situation would be. With a very healthy order book, I would also expect the revenue to be in the ranges of, on an annualized basis, 300 crores per month. So anything around 3,600 crores upwards is what my target would be.
Although the quarter gone by, your margins have come down. 16 has become 11. Why is that?
So this is primarily because of the issues that you have different projects in different stages. We do not book all profits during the early stages of the projects. We let it stabilize before we start recognizing those projects, profits on the projects. So these quarter-on-quarter basis variations you would see. However, on an annualized basis, we do believe that we have been doing about 11% or so, and we expect our revenue run rate will increase in the FY24. The margins to not only keep that tracking, but also improve up from there.
Your revenue has gone up substantially. Was it largely because you booked some orders on the revenue line?
So we had booked these orders some time back, other than the Dharavi, but they have now started churning the revenue. As you know, the developmental projects, they take some time before when you book them to the time they start giving the revenue. Also important is that we won a large project in Dharavi sewage treatment plant, which has also now started chucking revenue. UPJJM, which was a 2,500 crore rupee water project, has also now started giving substantive revenue. The other thing is that we had taken an EPC contract in a UP Bihar section, namely Varanasi Aurangabad. That project is doing very, very well. So overall, all our projects that we have are now operational. So this is the uptick that you see in the revenues because of those reasons.
The breakup of the water business, how much is state, how much is center?
So primarily, if you see, water is primarily a state subject. It is supported by the center. So we have a project in UPJJM, which is partly supported financially by the center. However, it's a UP state project. The other project that we have is in the Dharavi, which is a BMC or a Maharashtra-based project. So these projects primarily are always state-backed. Center only financially supports them.
Now that you've got multiple state elections, at least in the next 6 months, you've got large states which are going. Could there be disruptive for you, or it's going to be work as usual?
I think it will be a work as usual. I think the businesses have learned to deal with these normal state and center elections. These are part and parcel of our democratic setup. So I don't think it's going to be any disruptive. If there's anything, I would say it will be positive because there will be a lot of orders that will come up during this phase because the governments will want to have a situation that there is an infrastructure development in the states and at the central level as well.
Mr. Garg, your focus towards diversifying your order book, 60% is from water, 40% from road. What do you think over the next 2 to 3 years your order mix could likely be?
So I am currently focused primarily on road and water. Now, I think earlier the water was in nascent stage. Water has also stabilized and the road has also stabilized. So we have now two stable businesses. We would be thinking primarily into augmenting one more line at best, because that's something which I think three verticals, any large business is stable when it has at least three offerings to make in the businesses that we are.
Okay, fair enough. And you have a cash balance of about 1,500 crore rupees. How are you looking to utilize these funds? Will it be in investments in new segments? And what will be the cash level standing at for FY24 given the asset monetization plans?
So, as you know, we've monetized about assets worth about 6,000 crores EV value. We are supposed to receive 2,700 crores out of that transaction. We have already received approximately 2,500 crores. So we are sitting on a pile of cash. However, some of this money that you see is pre-committed. We had 1,800 odd crores at the time of in the March end. So out of which about 290 crores we have utilized for buyback and another 290 crores is allocated towards the debt. In the existing business, we believe we could utilize about 375 crores. So we are left with about 900 crores for future growth in the existing businesses or any other add-on business that we want to start. So I think we are in a very healthy position of both a very strong balance sheet, strong cash flow, and a governmental push for infrastructure. So we are absolutely at the right stage. It's for us to now let our business instincts and cautious approach drive us towards the operational excellence and create value for the shareholders. We are a very focused company towards creating value for the shareholders. If you would recall, even as late as this last board meeting, despite that we had released a dividend of 7.5 rupees per share, another 1 rupee has been approved by the board. So practically over the last 5-7 years, we have returned almost 50 rupees per share to the shareholder. So we are very focused. We will do things which are right for the business and for the shareholder. And that's why we always remain very, very cautious in the projects that we bid and win.
All right. Thank you for joining in and giving us a view on how business is shaping up. That's Welspun Enterprises. No disruption due to elections. Revenue run rate will improve and they are looking at a healthy order book with a 10 to 15% win rate for their orders and a target revenue of 3,600 crores.